Hey, what is up, dudes and dudettes? This is Dudediligence here. And yesterday, or 2 days ago, not really sure. Sorry, I live in the future. So yeah, I don't really know about the past. But if you go on my YouTube channel, you will realize that, well, this is actually Patreon. No, this is actually main channel on Discord. Yeah, if you want to join, if you want to join Discord, just there's a Discord link down below. And if you want to have exclusive chat channel with me on Patreon, you can also join Patreon. It's only $10 per month. I mean, I don't really, at this point, I don't really, stress about Patreon or whatever. Patreon is really valuable in terms of if you really want to learn, if you really want to sort of, you're into investing as an activity, as an hobby for a longer period of time. Sometimes I answer some text questions and sorry, I have a phone call. I will just make this video real quick and if you go look at this video explaining volatility using Tesla and MMAT, in there you guys sort of have a sneaky peek of my Tesla price sort of triangle right here. I will show you guys. You see today's price action just like literally, okay? You see this? You see this wedge I drew or this triangle I drew? I just landed right on here. So what does it mean for Tesla is it's attempting to break out, but the downside volume is trying to squash the upside volume, but at the same time the upside volume win. So if let's just say we don't have any negative news for the rest of this week, which I doubt it. It's trailing towards it. Basically it's attempting to break out of this wedge, okay? But attempt to break out to what point? It's probably around here. How do I know that? Because I have a brain and I have an algorithm that sort of collects data and do all those kind of stuff. And also, if you just want to wing it in terms of like a previous support line, this is literally what it is. So 950, which makes sense. Also, it's like one of those option standoff points, especially for Tesla. Again, if it's trading down, then it probably want to stay within range until both negative or positive volatility get extended or getting exhausted by the next exploration, which is this state, right? So 50% stays in here and then 50% goes over, right? It's that simple. And then if we want to go and look at Nasdaq, Nasdaq is actually on the train right now. We have what we call, if you guys believe in technical analysis, right? If you guys believe in technical analysis, then you will see that there's a cross. There's a cross. Whenever there's a double cross, there's always going to be a triple cross. So what does it mean is volatility. The volatility playground is the range from here to around the blue line. And whether long side wins or short side wins, it just means that if long side wins, the next price line you're looking for is the 15,000 line, and it's most likely if it goes over this line, it's most likely go up to 15,000. But the probability of that happening is a little bit low. One of those best case scenario is it will reach this line before the first interest rate hike, and then when the first interest rate hike happens, it will just go back down to 13,400, or it's probably gonna briefly touch 13,000 to about 12,800, and then it will have another recovery action. Again, a lot of I think the assertion is right. We all believe that a lot of things are overvalued, and we see a huge reshuffling effect on the entire market. Small cap stocks is getting hammered down for the past week or month or whatever you call that. A lot of tech stocks are readjusting its value. Some of them, especially the newer ones, are down by 50% or 40% or 60% to 70%. Namely Beyond Meat, and now we have Roblox that decreased by 55% sort of on a yearly basis. Stocks take turns on getting beat down, so that Nasdaq itself doesn't really go on a free fall. We call this a controlled correction. This is actually a controlled correction. Every time a rate hike happens, there's gonna be controlled correction no matter what, because this is something that Fed already sent a signal to the market, and the market sort of sent a signal to the banks, and then banks send the signals to its lenders on its entire system. And plus, when Federal Reserve sort of like plan to taper or plan to do their interest rate hike, they sort of send out little signals to the banks like, hey guys, you can either tighten up your banking, your loan policy, or you can loosen it up a little bit. And they have those monthly meetings within banks and the central banks. This is why it's sort of like always been a very iffy or sort of like a awkward dynamics between the central banks. I mean, the Federal Reserve and the regional banks or bigger banks. And a lot of people believe that if you work in those banks and you have direct communication with the Federal Reserve, you should not be openly trading as a bank trading professional. But those are a little bit vague in terms of like how the legislative branch and how execution really happens in real life. But in reality, whenever people who works in banks knows that interest rate what happened within a 2 or 3 month time period, and this is why a lot of stocks like WFC or C, right, or stuff like JP Morgan or whatever, they sort of go through a volatile downtrend, and then when people are very depressed, especially retail players are depressed, and they just exit the market, that's where institutions sort of pump it up a little bit more, and then to an extent where consumer optimism starts to kick in, but in reality economic situation never change, will go up a little bit and then go down, and then retail will probably buy up on a higher point and they become back holders, and then it sort of draw down to a stop loss rate position, and then retail sort of sell at a loss, and then what happens right after that, it pumps up again, and then really the major catastrophe or major event happens, it will go back down to whatever a market consensus value is at. It's probably around like 13,000, and afterwards consecutive rate hikes and all those kind of stuff is sort of like have a very volatile back and forth motion. And again, by the end of next week, we will be we're doing a big data project on in terms of what the computer and what we think the market will drop right on the day or right on a week of interest rate hike. We have data to support that. We sort of built several models to help us understand how much Nasdaq will drop. And I will probably post a video first on Patreon, and you guys will see it in a public forum, aka on YouTube, about 2 or 3 days or maybe a week after Patreon will see it. Or maybe Patreon members are very generous. They're like, oh, you can post it on YouTube, then I'll post it. Again, thank you so much for listening. And if you like this video, smash the like button and subscribe. And at this point, none of my videos are made possible unless they're all possible because of my Patreon members' contribution and their warm support, and without them, probably all those contents are probably impossible to make. And again, see you guys on the upside. Hopefully everything goes well, everybody makes money. I'll be really happy. See you guys on the upside. And if you guys are waiting for the GME trading plan, okay, I'm planning to make that, okay, but I have another meeting in about 30 minutes, and hopefully I'll have more time later on in the afternoon or maybe at night. But on Friday I probably will post 2 videos. I have them canned or prepared, and on the weekend I will post about 2 videos depending on how editing goes. See you guys on the upside.